Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. Last week was a great week, even though we had FOMC. It was the second week in a row that we had 7 out of 9 Forex pairs highlighted in the weekly Forex Forecast video, closing successfully in the direction we were looking for. And in fact, the only two pairs that didn't close in the direction we were looking for were Euro dollar, pound dollar, and of course with FOMC last week, those pairs were directly affected by this. And in the end, the market discounted the hawkish rate rise out of FOMC last week, and we're going to look at that a bit more when we look at the dollar and also at stocks in today's video. So with that said, let's get into today's video. So a quick look at the economic calendar for the upcoming week, and firstly, just having a look at last week, you can see the interest rate decision out of the US 0.25 to 0.5, and out of the UK 0.5% to 0.75%. So we had rate hikes out of both the US and the UK last week. Coming into this week, not really too much we need to pay attention to. A bit of inflation data, speech by Powell, which I don't anticipate as being anything significant for the market. But we do have an annual budget release out of the UK on Wednesday, something to consider with the pound pairs. And also, we have an interest rate decision out of Switzerland on Thursday. Now, when we go through the scorecards, you'll see the Swiss franc is neutral heading into next week. And I think there are much better markets out there anyway, other than the Swiss franc. And we're going to have a look at those in today's video. But if you are involved in Swiss franc pairs, just remember next week that the SNB they have a policy of Swiss franc devaluation. The Swiss franc, in their opinion, is too highly valued. It's stronger than they would like it to be. And so I would say if you are holding Swiss franc pairs, the risk would be to the downside from the interest rate decision next week, since Swiss devaluation is the policy of the SNB. So just something to bear in mind next week, but I will unlikely be trading the Swiss franc pairs personally anyway. And as always, if we just shoot one extra week ahead to see if there's anything coming up, you can see we have a pretty bare calendar. There isn't really anything coming up. We have non-farm payrolls, but nothing such as the interest rate decision that we would need to plan around in advance. So with FOMC out the way last week, we now have a pretty clear run on the economic calendar for the next couple of weeks. Not really anything we need to pay attention to. Okay, so a quick look at the scorecard shows us that the Australian dollar has actually increased in strength from last week. The Aussie was highlighted as one of the best buys last Saturday. The New Zealand was also highlighted as a best long play, and the US dollar. The US dollar struggled a little bit last week because of FOMC. When you have an interest rate decision, as I've discussed many times in the video, you can see the market kind of just correcting into that. And then what happened was, on FOMC itself, the markets just discounted the very hawkish rate rise. And what that means is we cover markets as a discounting mechanism in the free GMT course. And it basically means that institutional investors, they're buying in advance, let's say the DXY, and then they need, because they bought over here, or they bought down at these levels, they need to sell their positions to book profits. And when you get a very hawkish Fed coming out, they know retail traders are going to come in and buy on this. And so the very people who are looking to buy are being sold to by smart money who buys in advance. And that's what's known as the markets as being a discounting mechanism, and why when you see sometimes, like FOMC last week, a very hawkish Fed, but you see the dollar selling off instead of rallying. And some people get confused by that, but that's why. It's because markets are discounting it. And you also saw this in the stock market. You saw selling into the actual FOMC event, and then they used that event itself, because you get lots of people stepping in and trading the events, and so you get much more liquidity. You use that as a chance to unwind any price shorts, and you get that bounce like we saw in stocks. And we're going to look at those markets in today's video, but just understand that's what happened last week with the DXY. With stocks, you saw the markets discounting FOMC, and hopefully that explains to you, gives you an idea of how that takes place in the markets. So coming into this week, the Australian dollar is scoring number 4. It's the highest scoring currency. This is actually scoring overbought. It means we should expect a correction in the Australian dollar over the next 1 to 4 weeks. I like the Aussie dollar still heading into next week, despite the fact that it's at this level, which is scoring as overbought. And it does mean that we may get one more push up into the highs. When the market is overbought here, it doesn't mean you should go in and short it necessarily. Some people like to pick tops and bottoms. I personally don't. This really is telling you to book profits into the highs. If you've been long for the last few weeks, it's telling you over the next 1 to 4 weeks, you're probably going to see a correction. And so any push into new highs is probably going to be the end of the overall move to the upside before a near-term correction. So I do still like Aussie based on what I'm seeing in the charts, despite the fact its scoring is overbought. I think we may have 1 or 2 more weeks to the upside in this, and so it is my favorite long currency heading into next week. The second currency to the upside is New Zealand dollar, and then we also have the Canadian dollar, which, as you can see, has increased in score with a net change of +2. So although it only scores 1 here, you can see we're gaining momentum from last week. We are starting to move to the upside, and I wouldn't be surprised to see the CAD starting to score 2, 3, and perhaps even 4 over the next 4 to 6 weeks. So although it only scores 1, I do like the CAD pairs to the upside next week because of the momentum we're seeing to the upside from last week. And you can quite clearly see now the markets aligning in a stagflationary play. We've got the commodity currencies right near the top, Aussie, New Zealand CAD, and down the bottom you can see we've got the Japanese yen, and we also have the euro to the downside, etc. So the Forex markets are quite clearly pointing towards a stagflationary economic condition. And going into next week, I do favor, as my favorite currency pair, Aussie yen to the upside. We're also going to look at New Zealand yen to the upside. Also going to have a look at CAD yen to the upside in today's video. Also going to be looking at Euro Aussie to the downside, Euro New Zealand to the downside, which we looked at last week, which was also a good short, and also Euro CAD to the downside. And of course, the strength, the momentum we're seeing coming into the CAD is now because of that rally we saw recently in crude oil. We're starting to see the Canadian dollar catch up with that spike in crude oil. And we're also going to look at pound Aussie to the downside, pound New Zealand to the downside, pound CAD to the downside. But just bear in mind, we have the annual budget next week. So I favor JPY and Euro shorts over and above pound shorts, but there may be room for the odd pound short either before or after the annual budget next week. And as you can see, the Swiss franc is basically neutral, so it's almost out of action next week anyway. I don't think it's either a good long or a good short, and it's probably better to wait until the SNB come out next week and maybe the Swiss franc comes back into play the following week. So we're kind of looking at continuation of the setups from last week, but with the addition of the Canadian dollar pairs, which are now benefiting from that rally in crude oil. Okay, so let's have a look at the individual currencies very quickly before moving on to the pairs. And as always, looking at the daily chart here just to get an overall picture of what the individual currencies are doing. Looking at the DXY, you can see really nothing has happened in the DXY. It's just been correcting. And if anything, it looks like it's forming a little bit of an ABC. And I wouldn't be surprised to see this continuing to the upside in the near future. It does score as +1 on the scorecards over the next 1 to 4 weeks because it's forward looking. The scorecards are forward looking by 1 to 4 weeks, which is why they're 1 month forward looking scores. And so although it's currently neutral, it is bullish to neutral. So I wouldn't want to be short the US dollar as it currently stands. And in fact, we may even find the US dollar starting to strengthen, starting to break higher against some of the other currencies like the euro, like the yen, heading into next week. Next is the euro. Now again, just inverse to what we're looking at in the dollar, you can see we pretty much just have this bear flag setting up in the daily chart. This looks like nothing more than a correction as it currently stands, and I am looking for further declines in the euro, and it does score as the second weakest currency on the scorecard. So I'll be looking for this move over the next 1 to 4 weeks in euro, 1.0744. And because we came back and tested the previous low over here, I wouldn't be surprised to see this starting to weaken from next week. So euro shorts absolutely on my radar for next week. Next is the pound. Now the pound has also sold off quite strongly, and again, as it currently stands in the daily chart, this just looks like a correction. I am looking for the pound to come down to the 1.2984, and although we have the budget next week, I would be bearish on the pound overall. I do favour yen and euro shorts for 2 reasons. One, because as I said, we have the budget, the annual budget next week, which can cause some unexpected moves, or it increases the risk of the pound pairs or pound trades. But also because it doesn't score as low as the yen or the euro anyway. So it's only the 3rd best short as it currently stands. So I do favour pound shorts. I wouldn't be surprised to see this rolling over to the downside, but I prefer euro and yen shorts heading into next week. Next is the Swiss franc. Now the Swiss franc is scoring as bearish to neutral, and you can see here we have actually broken out of this sideways correction. So overall, I would favour Swiss franc short positions. If you are long the Swiss franc, you have 2 problems going into next week. One, the Swiss franc itself is structured to the downside, and it looks like, just as we're looking at in the euro, in the pound, this is just a near-term correction for further downside. But also, as I said, the SNB has a policy of Swiss franc devaluation, so I wouldn't be surprised to see them talking down the Swiss franc next week when we have the interest rate decision out of Switzerland. So I'm not personally going to be looking to be long or short the Swiss franc next week, but overall, on balance, what we're looking at tells me that the risks are weighted to the downside for the Swiss franc. Next is the Japanese yen. I highlighted last week this was actually quite a big breakout, and yen weak setups or yen shorts were highlighted as a good thing to look for. The Japanese yen was highlighted last week in the currency pairs as some of my top or favorite pairs to trade last week. Aussie yen to the upside, US dollar yen to the upside, New Zealand yen to the upside. These were all great markets which were highlighted in last week's video to the upside. We took out the target at the 0.084360, and as you can see, we just have really nice momentum to the downside in the Japanese yen. So I would expect a short pullback in the yen, and when we look at the yen pairs over here, you will see some of these have strong momentum to the upside. So we're going to be looking for those corrections first, but that correction will be an opportunity to look for further declines in the yen. And when we look at the yen pairs here, this is further advances to the upside in those yen pairs. So I'm looking for the yen to come down to the 0.0083470 next. And definitely yen shorts, even if we have a small correction first, are high up on my list next week. Next is the CAD. Now, in last week's video, I highlighted this potential inverse head and shoulders setting up, and I said the Canadian pairs were not quite ready, although I did anticipate, because of the oil price, some CAD strength, and I wouldn't be surprised to see them coming into play over the next couple of weeks. I said that, I believe, in last week's video. It might have been the week before, but I think it was last week's video. And as you can see, we have now started to break to the upside. And this is looking like the start of a breakout. This is where we're seeing that momentum as well in the scorecards, coming in +2 net change last week. And absolutely, I am looking further advances in the Canadian pairs next week. And as a result, CAD long positions alongside Aussie and New Zealand are one of my favorite plays heading into next week. Next is the Aussie. Now you can see the Aussie is approaching new highs over here, the 0.74650. Any pullback in this market, I am looking for further advances, and you can see it looks like it's starting to break out of a major double bottom here. And if this stagflationary environment persists, we're going to see the commodity currencies, and the Aussie especially, continuing to rally to the upside. So I like Aussie longs going into next week. It is overbought, so maybe we only get one more week of further upside in Aussie. We'll have to see, but for the time being, I do still like Aussie long positions. And finally, we have the New Zealand dollar, again benefiting from the stagflationary scenario we're in, looking for further advances to the 0.69750, and it is my second favorite long heading into next week. Okay, so looking at the markets themselves, starting with crude oil, you can see crude oil has pulled back and retested the 95.580, which I highlighted as a major breakout level to the upside. Previously, we tested it, then we broke through, we came back and retested. And after retesting this level, we've now started to break to the upside. So I am going to be looking for further advances in crude oil next week. Any pullback in this area is viewed as an opportunity to look for bullish setups into the 118.19. Just bear in mind, oil is very volatile with the ongoing events in Ukraine. And so if you want to just avoid that volatility altogether, because you don't want to increase the volatility in your returns or take too much risk because you want risk-adjusted returns, or in other words, the most amount of returns for the least amount of risk, then you can leave crude oil altogether. However, if we do start to rally to the upside, you are going to see derivatives of crude oil, maybe energy stocks, certainly the Canadian dollar, which we're going to be looking at, benefiting from this. So you don't have to trade crude oil. If you don't like the volatility, you can look for derivatives instead. But I am looking for crude oil to advance towards the 118.19 next week. Next is Aussie yen. Aussie yen is my favorite market going into this week. You can see we took out both targets to the upside last week and then some. This was a fantastic market highlighted in last week's weekly Forex Forecast video. Going into this week, look at the momentum since we broke out of here. This is really, really nice. And what I'd be looking for now in this week, we'd need to see some pullback. I wouldn't want to buy it right at the top here, but any correction in this market is going to be viewed as an opportunity to look once again for bullish entries. And I'm going to be looking up towards the 89.07. Next is EurUsd. I really like EurUsd to the downside next week. We have this huge bear flag. You can see it looks like an A, B, and a C up here. And we've broken out of here now. And I do think coming down to the 1.4652 is a high probability move in this market. What I'd like to see, as always, is any pullback in this area, and any pullback like this would actually form a head and shoulders pattern. Any pullback in this area would be viewed as an opportunity to look for bearish reversals and bearish setups down to the 1.4652. Next is Pound Aussie. Pound Aussie was a short from last week, and we did come down, and we're very close to the target set last week at the 1.7747. So anyone involved from last week, you are looking now almost at taking out the target, and I would expect for this target to be taken out this week. If you weren't involved from last week, what I'd be looking for is if we take out this target first and then start to bounce like this, Any pullback would be viewed as an opportunity to look for further sell-offs into the 1.7698, and if we can break through here onto the 1.76270. So any pullback in pound Aussie next week is going to be viewed as a good opportunity to look for shorts. It's not highlighted in gold here because of the twin aspects of the budget next week out of the UK, and also the fact it only scores as the third weakest currency after yen and after euro. So Aussie yen and Euro Aussie are my two favourite pairs heading into next week. Next is New Zealand yen, another really good market from last week. We took out both targets and then some. Heading into this week again, you can see the momentum from this previous correction. We've broken above this correction here with really strong momentum. So any pullback in this market, and the deeper the better, as it gives us better risk to reward towards the targets. Any pullback is going to be viewed as an opportunity to look for bullish breakouts like this. I'm going to be looking up towards the next key of resistance, the 82.74. New Zealand yen is my third favourite pair heading into next week. Next is Euro New Zealand, another really nice looking pair because we have this big bear flag sell-off. Again, looks like an ABC correction, and we've started breaking out to the downside. A move down to the 1.5667 is, in my view, a high probability move, and so any pullback heading into next week, and again, any pullback here will give us this head and shoulders setup. Any pullback will be viewed as an opportunity to look for bearish breakouts like this, down to the 1.5667. Next is Pound New Zealand. Pound New Zealand also looks like a good short. We have this kind of range down here like this. You can see this correction after this momentum sell off to the downside. I'm looking further declines, but again, it's not highlighted in gold because of the same reasons discussed for Pound Aussie. But any pullback in this market would be viewed as an opportunity to look further declines into the 1.8859. Next is CAD Yen. CAD Yen also looks really nice heading into next week, and it is in my top 5. Any pullback in this market is simply viewed as an opportunity to look for bullish breakouts into the 95.35. So definitely keep my eye on CAD Yen next week. Next is EuroCAD, not highlighted as one of my top 5 heading into next week. However, it does still look very likely to head down to the 1.3752 and is on my watch list. Any pullback in this market next week is simply viewed as an opportunity to look for bearish reversals down to the 1.3752. And if we can break through here, going to be looking down towards target 2 at the 1.3523. Next is Pound CAD. Again, not highlighted as one of my favorite. I much prefer the yen and the euro pairs to short. However, any pullback in this market would be viewed, as it currently stands, as an opportunity to look for bearish breakouts down to the 1.6416. You can see, even just by eyeballing this, we're starting to lack a little bit of momentum in this market, and that is because the pound is a little bit stronger than the euro, than the yen, and so these sell-offs to the downside are struggling more than they are, let's say, in EuroCAD or to the upside in CAD Yen. And finally on here we have the dollar pairs, because we might start to see the dollar rallying from that kind of ABC correction we discussed earlier when we looked at the dollar index. US dollar yen last week was a fantastic market. We took out the target set at the 118.55. Not highlighted as one of my preferred trades. I prefer Aussie yen, New Zealand yen, and even CAD yen over this market next week. However, it is still on my watch list and I am looking for further advances. So any pullback in this market first will be viewed as an opportunity to look for bullish breakouts into the 119.99. Next is euro dollar. We cover euro dollar every single week because lots of people like to trade euro dollar. However, I think there are better markets to trade next week. I am looking for further declines in this market. I'm treating this just as a big ABC correction. What I'd like to see is any break lower in this market like this would be viewed as an opportunity to look for a pullback and further declines into the 1.0781. And finally, we have pound dollar. Again, I'm just viewing this as a pullback. And if we start to see the DXY, which is currently just doing this, if we start to see it come down and start to bounce and rally, I would be looking for further declines in this market as well. So what I'll be looking for is any break lower like this next week. If we start to see the dollar index rallying, and it might not be next week, it may even be the week after, which is why it's slightly lower down on the list compared to these markets. But any breakdown like this would be viewed as an opportunity to look for a pullback and further declines into the 1.2979. Okay, so finishing off with stocks, gold, silver, and Bitcoin, starting with the SPX. You can see last week we had a rally to the upside. This is a short covering rally after FOMC. Everybody who was short, or the institutional investors, smart money who was short, used the liquidity around FOMC to cover their shorts, and that's why we got this rally to the upside. This has all the characteristics of a short covering rally, which is that it's sharp and it happened quickly. And I wouldn't be surprised to see stocks moving higher next week. Just bear in mind, if you are going to be long or trade stocks to the upside, as it currently stands, the overall trend is down. So you're trading essentially counter trend as it currently stands. That would change on a big break above the 4581. We would have to break up like this and then pull back. But as it currently stands, any long positions should be considered counter trend. And I am looking in SPX for the market to come up to the 4581.78. If you'd rather stay out of the stock market altogether than to trade this counter trend to the upside, there's nothing wrong with that. Next is the Nasdaq. The Nasdaq also had a short covering rally, and we've broken the high over here, which is actually a double bottom in the Nasdaq, but it's a double bottom in an overall downtrend. So the risk is that you break like this and then you fail maybe at the target and then you come down for the next move down. So again, it is currently structured to the upside, but you would be trading this counter trend as it currently stands if you're involved long. There's nothing wrong again waiting on the sidelines, looking for the next impulse move to the downside if that's what you would rather do. Or, of course, if there's a bigger reversal to the upside, then we can start to look to be long in the next couple of weeks. Just remember, when you have stagflation, you can see stocks getting kind of corrective because you're looking at low growth, high inflation. And you can see even here, there is no real clear direction in the Nasdaq. We're kind of back to where we were at the beginning of the year almost down here in January. So it is near-term bullish, but just bear in mind, this should be considered counter trend to the upside as it currently stands. Next is the Dow Jones. Again, we had a break to the upside in the Dow Jones. It does look like we've got some momentum in here, so I would be looking for any pullback in this market into the 35594.05. Once again, as this stands, this should still be considered a counter trend move because overall, the trend is still to the downside. We're making lower lows and lower highs. And counter trend moves are always more risky. So again, you don't have to trade counter trend. You could just sit this out and wait for the next impulse wave or for clearer market direction in the stock market. Next is the Russell. Now, I have been saying in previous videos, the Russell is kind of in no man's land. It's in an area where it could break higher, or we could start a bigger sell-off to the downside. And because it's been in this condition, it's just been correcting. And last week we had the short covering rally, but the key area is the 2107.08. This was the major breakout to the downside where we started this downtrend. And so we could just come in and retest this and start to roll over to the downside. So again, there is no, despite this short covering rally, there is no clear breakout to the upside as it currently stands. If we break the 2107.08, which is right here, the next target, and we break this with momentum, that would be the sign of a potential inverse head and shoulders or even a double bottom if you wanted to take these 2 points here. And that may be the start of a reversal to the upside. So because we're so close to the 2107, there's not really much potential here to the upside. I would much rather wait next week for the Russell just to have a look at it, see what it does, and see if we start to break higher with momentum, which could signal the new bull leg to the upside over the next few months, or if we fail at this double top and we start to break down, and if we come down and break this level down here over the next couple of weeks, that would be the start of, in all likelihood, a major sell-off to the downside in the Russell. So I said previously the Russell is in no man's land and it hasn't broken out of there yet. Patience still required on the Russell in my opinion. Finally, we have the Nifty. Last week the Nifty broke above the red line, which shows you the reversal line. Now it's down here at the 15716. So as long as we're above the 15716, I'm looking for breakouts to the upside. Any pullback in this market, if we come down and close the gap, is going to be viewed as an opportunity to look for further advances into the 17485.35. So overall, especially on US indices, I am kind of bullish to neutral. I'm bullish, but it's counter trend. And there's nothing wrong if you want to wait on the sidelines for more information to come in over the next couple of weeks in terms of the US indices. Okay, so wrapping up with gold, silver and Bitcoin. Starting with gold, I am still bullish on gold. We had a big rally to the upside, then we had a big sell-off to the downside. And you're just looking at volatility here. Just because we had a big sell-off doesn't mean it's necessarily bearish. It's just a big sell-off because we had a big run-up and a big rally and the whole asset itself is volatile. So any continued pullback in this market, especially with the dollar starting to weaken a little bit, I am going to be looking for a breakout to the upside. And I'm going to be looking up towards the next key area of resistance to the upside at the 2001.49. Next is silver. I am still bullish on silver, and as you can see, it looks like we're starting to break out of this recent pullback in silver now. We've broken up and it looks like we're forming a bull flag. Any continued pullback in this market would be viewed as an opportunity to look for breakouts to the upside. I'm going to be looking up towards the 26.89. And last but not least, we have Bitcoin. I have been bullish on Bitcoin over the last couple of weeks, but we haven't really gone anywhere. We've had a couple of rallies to the upside and then we corrected, rallied to the upside and corrected. So any pullback in this market is still viewed as an opportunity to look for bullish breakouts or bullish reversals. And I'm still looking up towards the next key of resistance to the upside at the 45649. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.